We got earnings to contend with. PVR Inox has reported a good set of earnings for the second quarter. So it's a profit of 106 crores. There was a loss same time last year, 11 odd crore loss. We have Ajay Bijli with us, and we have the CFO Gaurav Sharma joining in as well. Mr. Bijli, Gaurav, great to have both of you here. We're all dressed up. You guys are in suits, sort of.
I don't know. We didn't get the memo. We should have got that memo from you guys.
We should have told you, our fault. But wishing, you guys, your loved ones, and of course the PVR team, a very happy Dhanteras and happy Diwali.
Likewise to all of you as well. Happy Diwali and happy Dhanteras. Yeah.
Lovely. Mr. Bijli, talk to us a little bit about the quarter which has gone by. I mean, I think you've got a 12% revenue growth. The EBITDA is up in a much better way, some 28%. Margins, I think, are looking a little much better, actually. 400 basis points higher is what I've got here. And of course, the loss has swung to a big profit. So it's been a good quarter all told?
Yeah, I mean, we're very obviously happy because the good thing about the quarter which has gone by is that we didn't have too many blockbusters. So I think content is what is attracting people and not necessarily superstars and the budgets of the movies. So which is what was needed because, the script writers, filmmakers, they're also focusing on scripts. And the consumers are also saying we can't be at home incarcerated all the time and we need to go out and enjoy the big screen experience. So movies like Sanyara, Mahavatar, all Narsimha, all these movies are not big blockbusters. They were all sleeper hits. They've done well. Hollywood has come back in a big way. And PVR Inox, of course, our USPs, some big formats that we've got like IMAX and also F1, Jurassic Park, Superman, Conjuring. Regional films have remained steady. But I think all sort of content has been firing, and as I said, there is a fatigue factor of staying at home and watching movies on the small screen. That's also gone away. It's taken its time, but definitely people have realized that our business is anything like any other infrastructure, out of home infrastructure business, and it's always. And I don't know why we keep getting into this either and or debate. Because, you've got so many things happening at home and people still go out to restaurants, they still go out, and shop. And similarly, movies can be watched at home and outside as well. So it'll always be a coexistence, and which is finally played out. So very excited about this.
So two questions, Mr. Bijli. How much? So it was a good pipeline of content, right? In second quarter. So could you give us a sense of what this quarter, the quarter that we're in, October to December, is looking like in that sense?
It's opened up very well. I mean, Kantara 2, all the movies that have played in quarter 2 or years, none of the movies have crossed 500. We've had 22 movies which have crossed 100 crores, which is a lot. But Kantara is the first one in this quarter which has started, will cross 500, has already crossed 500. And then got Avatar, and we've got, this new Ranveer movie, Dhunadhar, and Thama is coming in Diwali, which is a big one from Maddock Films, which have been producing good movies, Alpha. So the big lineup is there. And so far the momentum is back. And as I said, again, there could be some sleeper hits, which are difficult to anticipate just now, which may also end up firing. It's the momentum which is exciting, and rather than just individual movies which are driving people to come to the cinemas.
Right. Mr. Bijli, just before we move on and ask Gaurav about the ATP and the spend per heads and the occupancy is what they're expecting in the third quarter. People are going to the theatres for Kantara, etc. I can see that. But I have to tell you that, a couple of weeks ago, I had the opportunity to speak to Amir as well, when he spoke about, the new thing that you've launched in Karnataka, in Bengaluru, where it's a restaurant inside a movie theatre, as against it being a movie which is playing in a restaurant. I wanted to understand the economics behind that. He said, the capex is about 3 crores, the occupancy is about 70, 75, and it's the spends per head, which would mean that it's revenue neutral for the company. I just wanted to understand, it's been 2 weeks since its launch, how the initial response to that has been, and what your prognosis for expanding that beyond Bengaluru is.
Yeah, we're all about experience because, that's the biggest difference between watching a movie at home and watching the cinema on the big screen, movies on the big screen. So I think formats like Lux, Director's Cut, Gold Class. In fact, the first Gold Class that we opened was in 2004, way back in Bangalore. I think they also had to evolve now. So I think we're always looking at innovation, and this is one such experiment. It's a pilot still, and we've done it in Bangalore because Bangalore, I just find, basically responds the best to pilots and experiments. We've just and it's absolutely on track with whatever Amer said in terms of occupancy and F&Bs. And now I think we'll be rolling out this format in other cities as well. And I think that's the advantage that we have with the scale that we've got, in all humility, that we can experiment with pilots and see how they make the cinema going experience more and more experiential.
Gaurav, come in on the expectations on the ad revenue. This is the highest ad revenue that you've seen post-pandemic. In Q2, it's a growth of 15%, first half about 16%. What's driving the momentum, and do you see this number perhaps moving, say, towards the 20%? Or will it be 15% kind of ad revenue growth for the next 12, 18 months?
I think the momentum has been very strong on the media sales and the ad revenue front, largely driven by a very strong content story across Bollywood, regional, and Hollywood this year. And, a lot of films have generated buzz, and that has helped us in locking some long-term deals at a very high yield this year. And when I, kind of look at the lineup for the rest of the year, it's pretty strong. Typically October till December and even till February, March, most of the big films, especially in South India, are released towards December. And we believe that, this momentum that we have seen in Q2 will only accelerate in Q3 and rest of the year.
Right. And what's your prognosis for the second half when it comes to average ticket prices, average spends per head? Because you'll have also, tried to drum up the value equation of people eating at theaters. So that may have an impact on spends per head, perhaps?
No, I think, ticket price is a result of what sort of movies are coming and what's a mix of films. So far in Q2, especially compared to last year, there's been a muted growth in ticket price. And that's largely because, films like Mahavatar, Narsimha, or, Sayara, that's kind of attracted a lot of value conscious audience. We are also doing a lot of work this year. Our biggest focus is to drive footfalls. And, Blockbuster Tuesday is one of the initiatives where the tickets are priced at a lower level, and Blockbuster Tuesdays has been a big hit. I think when I look at the next few months, we have a very strong lineup of big blockbusters, and especially, films like Avatar, Dhurandhar. The consumer profile who will show up in cinemas, in our view, will be far superior than what we have seen in the previous few months. And as a result, the overall realization we feel will be higher than what we have seen in the last Q2.
Mr. Bijli, just in terms of the new theaters, new screens which you will open, I think you're going into tier 2, tier 3 as well, right? What's the strategy? What's the thinking? And just if you can share some numbers as well, H2, what will H2 look like? And just your overall thoughts here.
Yeah, so 42 screens we've opened so far in the first half. And as we speak, we've opening cinemas in Siliguri, Guwahati, and also an extension of 4 screens or 5 screens in Orbit Mall in Hyderabad. So around 100 screens is what we're looking at again this year. And in various models, which is a FOCO model, franchise-owned, company-operated, as well as asset-light. And plus, wherever needed, we put our own capital as well. So I think we're pretty much on track of opening 100-odd screens this year. And smaller towns, again, we have to be very careful about where we open the smart cinema that we had announced. Of course, the OPEX is lower there, the CAPEX is lower, but we still are targeting the aspirational customers, even in the smaller towns, who really don't want their cinema experience to be compromised. And so that's also getting rolled out very shortly.
Right. But more and more, Mr. Bijli, this is going to be, as you said, a franchise-owned and company-operated. So capital light in that sense for you, from your perspective?
Yeah, I think a mix of both we'll do because, the hospitality industry has been doing this for decades now, where if the brand reaches certain recognition, They obviously have management deals and all. Nobody in the cinema industry has ever done globally, is what my understanding is. But there is a brand equity, in all humility, which has been built, and I think we are finding that people are happy to, own the brand in a way and give us a fee, both technical and management, in terms of and operate the cinema, and that keeps our capital light model going and doesn't compromise on our margins either.
Right.
Works for both them and us.
Could it be margin dilutive at any point in time?
No, we're still, in fact, healthier margins on these properties, because even the rental terms are very carefully structured. Because all the rents that we have currently are historical rents when the comparative intensity was very high. Now, of course, going forward, we're making sure they are on a rev share basis or rent to revenue ratio. If you common size, it doesn't go beyond 10 to 12%.
Right. Just a question on expansion itself. You've added 42 cinemas in the first half of this year. Are you also recalibrating some of the cinemas which are not functioning well or as per your internal estimates? Have there been changes out there? And the next leg of screens that you would open, would they be beyond tier 2, tier 3, where access is what will drive business as against just affordability?
Yeah, I mean, first of all, on your first question, last year, a lot of non-performing cinemas were closed, but this year only 8 screens have been shut. And I don't think going forward, there'll be any further closures now, because all the loss making and the ones where the malls were also completely decrepit. These are the cinemas we closed, and which happens with any retail company over a period of time. Some of the stores, so to speak, become obsolete and loss making. So therefore, the 100 screen count that I spoke about is net addition after whatever closures that are going to happen. And yes, these smaller towns, definitely have an aspirational customer, and there again. Our strategy will continue to remain the same, that you need to have enough number of people who have the propensity to at least pay 100 to 150 rupees ticket price, go out, and even do the spends on F&B. And the cinema is uncompromised and it's a destination. So we're rolling it out. And of course, the cities have to be accessible. The cities have to have the right demographic profile. It's not just on a postcode basis where cinemas are not currently present, as some other exhibitors are talking about. Postcode is one criteria, but also you need to have the right demographic to be able to come to those cinemas and make those threshold occupancy levels which are needed to make the whole project viable.
All right.
All right. All right.
Okay, all right. I just wanted to understand a little. This is purely from a personal taste standpoint. 4700 BC, that's a part of the listed PVR entity, or it's a part of the corporate entity?
So it's a subsidiary, and it's part of PVR Group.
And what revenue run rate is it at right now? Because I see it selling beyond the screens as well. So there is a very well laid out case for you to unlock value on it at some point in time.
Yeah, so I think, in terms of revenue, it's growing very fast, and it's into, packaged popcorn, which is more on the FMCG side of the business. And, the revenue run rate is upwards of 100 crores a year. And it's been growing at the back of the expansion in quick commerce and, digital sales. So you're right, it's one of the key assets in our overall group from a portfolio perspective.
I'm a big fan of this 4700 BC, and try and avoid sugar, but this is one thing.
Their caramel popcorn is pretty cool. And, a D2C brand doing 100 crore outside of PVR would have made a lot of headlines because they would have been backed by some of the PE ventures, etc. You get a 5-6 multiple. There's
you get popcorn in a bag and then you
it's in a big box. There's Hawaiian cheese, there's nutty tuxedo.
No, you got to put it in a...
It's ready. It's ready to be eaten.
It's incredible.
I see.
I think Prashant's asking for some of them to be sent to him so that he can experience.
I'll try it out. I mean, I've not tried it, but I'll try it. Lovely chatting with both of you, gentlemen.
Happy
Mr. Bijli
Diwali.
and Gaurav. Great to have both of you here. Thanks very much and happy Diwali.
Thank you, guys. Happy Diwali.
Thank you. Wish you a very happy Diwali.